following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Once more into the breach, dear friends, do we go? The show where there's no bull side, no bear side. All we care about is the right side. And I think the right side is probably a little lower. We'll get into that today. But not predicting any kind of end of the world. Dogs living with cats. All those disaster films of the 70s. None of that. But certainly we could probably pull back a little. We'll talk about that and some of the things we should look at to define that. What else do we have going on? Well, you know, every day we like to get together around this time.
The following takes place between 2 p.m. and 3 p.m.
Every day. And, of course, I appreciate all the new listeners to the show that others have referred. As I've said many times, all I ask is that you at least let one or maybe two people know about this show. And if you like it, it is a small price to pay for free 1 hour every day. And as always, we say, you know, just tell one person or two people, and then...
And he tells two friends, and she tells two friends, and so on, and so on, and so on.
And this would be a really big show. But I need your help. I'm making an appeal. Tell somebody. If you see something, tell someone. That's what they say these days. Anyway, what else do we have going on? Markets up, volume actually picking up well ahead of yesterday by probably about 500 or 600 million shares. And think about 600 million shares right now. 2.6 billion shares, and we'll call it 2.65 billion shares. We're up 15 points in the S&P cash, but there are some storm clouds on the horizon. We're talking about the normal storm clouds that you get. Down here in Florida, this is the time of year where you get all these little pop-up thunderstorms. They last for, I don't know, 10, 15 minutes. They rain, and then, of course, all that rain instantly starts to vaporize, and then we get the 155,000% humidity that Florida is known for in the middle of the summer. But it's just kind of normal. It's not uncommon. Nothing goes straight up. Nothing goes straight down. But we'll talk a little bit about what I see out here is maybe a little chance for a pullback into Friday and probably some of the reasons why. In the meantime, we always want to start off with a little bit of history because without history or knowing your history, you are doomed to repeat it.
That it's all just a little bit of history repeating.
On this day in 1943, women, believe it or not, are allowed on the floor of the New York Stock Exchange. Man, any day now they'll let them drive and maybe even vote. Exchange for the first time in its 151st year. With so many men off serving the military, the exchange allows women to fill some jobs. They are not allowed to trade, of course, but they do get the work done as pages and reporters shuttling other people's orders around the floor of the exchange. And, of course, after the war, they are relegated back off of the floor and into the secretarial pool. The gentleman that probably has done more for women in Wall Street kind of comes as an aside. And that was Mr. Petterfree, who started Interactive Brokers, was also the moving force in what would probably be called high-frequency trading. The first man to actually attempt it. Hired a lot of very attractive women on the floor. And, of course, a bunch of fairly overweight, unattractive men that worked on the floor. Even though they were told not to have anything to do with Mr. Pettifree's stock and option making attempts to start his business, because of course everybody else wanted to make sure that he didn't get any business and went out of business quick. But it was just too much for those folks in there in the Chicago trading floors to resist the pretty ladies. They went over, did business with them. And of course, he continued to move higher until he sold that operation and started Interactive Brokers. And that pretty much tells you, do I have that? I wanted to play it's the rest of the story, but I've got it somewhere, but I don't know where it's at. Maybe I'll find it later. Anyway, I was going to do one of those. And that's the rest of the story. But anyway, 1943, women are allowed on the New York Stock Exchange floor. Wow, imagine that. Anyway, we have come a long way, baby. Oh, remember those cigarette ads? Oh, boy. Anyway, interesting nonetheless. I have a, I informed you thusly.
I informed you thusly.
And that was yesterday. I said the long arm of the Securities and Exchange Commission was coming after Tesla. I did inform you. And what else can you say about it? Well, I did bring it to your attention.
Once again, things that could have been brought to my attention yesterday.
Well, I did. And that was, but it's a little different than you think it would be. And, but the tweets over the weekend, which Mr. Musk has been told many times to quit his pumping of his stocks, I have a feeling that this was kind of sitting on the shelf already, ready to go. But of course, the Securities and Exchange Commission is now looking into whether or not Mr. Musk breached security laws by failing to disclose his investors about a fatal crash in May involving the electric car that was in its self-driving mode. In the meantime, we now have 3 traffic deaths attributed to this self-driving mode. And the big one, of course, everybody knows. But, you know, it's one of these things that's very interesting to me to watch the bias in the news, especially on cable television. Oh, well, play it then. Play it. I have it somewhere. I just don't have it. Let us
now
have it.
You know the rest of the story.
Well, that's good. Anyway, it's kind of interesting to watch it for many years. Good day, sir. To watch, you know, right now, I've got kind of like spidey sense. And there's a few things I wanted to talk about. My spidey sense going off over the last few days has been almost a pathological need to say Facebook live streaming. I wonder if Facebook is paying all these guys to always say it. Facebook live streaming, or to actually use the video. They had to say it. Maybe it's the latter, but there's something going on.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. Anyway, Security and Exchange Commission's after him. It doesn't seem to have really bothered the stock that much, but it's not up. Maybe like you would think it would be after this news. But Tesla getting almost a free ride. Always interested in the bias in media. As I said, when I watch these things, I kind of get, you start hearing a bunch of stuff and you start knowing that for the most part, the people in the media are fairly lazy. And, you know, it's... probably the most famous event was one person used the word gravitas, and a Nexus search of that in the previous 12 months showed maybe 5 occasions where the word was used in all of media. After one gentleman used it as a anchor talking about gravitas, it was used 5,000 times that week on cable television. They hear something, they get stuck with it. Right now, the thing that's bugging me or making me, my spidey sense go off is this whole thing about Facebook's live streaming. Well, this was streamed live on Facebook. I wonder if they're doing that just so they can get access to the video or if they're getting paid off. I don't think I have it in my slides here today, but a company actually were paying off some of the YouTube stars to pump their video games. And I always wonder how much there is out there for the pay to play. The classic example used for media bias, of course, is the Associated Press and their style guide, which said that if the vehicle was a big vehicle, i.e. a SUV, that the SUV ran a bunch of people down. It wasn't like that there was a human in that SUV that was driving it that ran people down. It was the SUV's fault, and that's who killed the people that it all ran down. Of course, that was all kind of a political bias based on people that didn't believe people should have big cars because they were all knowing and all seeing, basically propaganda is everywhere. It may be as subtle as SUVs running down people. The issue now is whether or not and when the press turns on Tesla. It always seems to happen. Apple got a free ride of pretty much all the way up to 130 bucks. Anybody that said that Apple could go lower was yelled and screamed at. And of course, it doesn't happen in a day. But Tesla is, for all practical purposes, the biggest cult stock, I think, that I've ever seen, going back to iOmega. And I think it's surpassed iOmega these days. But it didn't matter what you said about iOmega. The stock just went higher and higher. Eventually, there will be no one left to buy Tesla at the highs. You'll see no volume. My guess is that this will have a very, well, like the movie title said, there will be blood and an absolute ton of it. But this continues in. But anyway, look for more and more of this. If Musk does not have to pay with the stock price, my guess is he will continue to flog his stock in a manner that makes me very nervous. He doesn't go on CNBC a lot, but a lot of times when I see CEOs flogging the stock prices of their companies a lot, it makes me very nervous. We saw that in one that I saw very early on. I think it was in 2011, and that was a stock that was in rare earths. And I think we got in it at 14 bucks and we sold it at 40 or 45, actually 45 bucks. I got out because I was thinking, wow, this is pretty nosebleed. Then pretty soon the CEO was on CNBC on a daily basis, it seemed like. Within a handful of days, was on 3 times. Again, flogging his stock, and that always makes me nervous. Generally, that is before a giant fall. We've seen it in many other stocks. Probably not a lot of reasons to be on CNBC on a daily basis if you're a CEO. Certainly not running your company. I saw the exact same thing going on with 3D Systems when it was printing from about 80 all the way up to 97. Learning the lesson of Molycorp, we shorted it up there at that 97 high and many times back down to lower prices. But there's a lot to be said with patterns in the market, not just stock patterns, but CEOs that maybe read a little bit too much of their own media and start to believe it. You have been warned. That being said, Tesla could go much higher. Again, it has no basis in what's going on anymore. It is all pure emotion like iOmega was. Other things going on in the media today. PCs are back. In your face, in your face, Mr. PC haters. The first shipments to go positive, both IDC and Gartner, which do surveys on how many PCs are sold, has increased for the first time in more than a year. IDC reports that shipments have increased by almost 5%. Gartner says they've risen by 1.4%. There's a little confusion because of what both of these companies look at. IDC looks at a lot more, and their numbers look at business sales, where Gartner looks at a lot more at retail sales. So retail sales still not moving a lot quicker, but certainly business sales, and especially the sales of laptops, expensive laptops, doing very well. So not selling a lot of cheap things, but selling a lot of expensive, high-margin ones, and things are back. We're seeing a lot of associated business doing very well in it. The very bad part of this comes in at Apple, who's seen a huge dive, and I mean massive dive in the sales of Macintosh desktop-style computers over the last 3 months. And they actually said that it's gone back maybe 4.5 months. But the big push to buy very expensive Macintosh PCs has taken a huge hit. That is a very smaller part of Apple, but still not going to help them out when things are a little tough out here. Apple up about 50 cents on the day at 78.48. I don't think a lot of people care whether or not they sell Macintoshes at all anymore. I think Apple kind of likes it that there's at least an alternative to PCs. But I think especially with businesses, they look at the double and triple prices of Macintoshes compared to PCs and think, you know what, maybe we don't need the Apples that much. We'll buy them for our executives, but for the masses of people who work for those executives, no PC for you. Maybe they're the PC Nazis, as on Seinfeld. Anyway, they are back. And if you're wondering why semis and some of the memory companies are doing well today, it's all about that. Nothing like coming off the bottom out there. Anyway, what else do we have going on? We're going to talk about rearranging the deck chairs as the Titanic goes and moves lower and under the waves, and why you want to short at highs, not after the story is out. We'll talk about Seagate.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Rearranging the deck chairs. Seagate bounced pretty good by saying they were going to fire 6,200 people. It's never a good thing when a company is going into retreat. But as I've said before, it's very hard for me to see how over time that either Western Digital or Seagate are around for a long time. Basically, everything they do is going to be replaced by memory in the short or longer term frame. The answer that still isn't being handled by spinning drives, which what they do, very inexpensive to store data on a spinning drive. The downside is when you have so much data, you just can't get anything in and out of a drive very quickly. And of course, the more stuff you cram on it, you're just exacerbating the problem to begin with. Think of, I don't know if you've ever been to Atlanta where they've got 12 lanes of highway. Let's just say they had 4, and they were never going to have any more than 4. Moving all that traffic as it gets more and more and more, you got to have more lanes. And there isn't an easy answer to this. There is some very expensive answers to this, and that's kind of what's being used now. Most of what Intel is doing in the near future will get rid of them. But you just fire people, you move the chairs around on the back deck of the Titanic. Eventually, it's going down. But after everybody knows the story, everybody's figured it out, it becomes incredibly hard to short these stocks because everybody short these things. You get big bounces out of these things out of seemingly nowhere, depending on what someone says in the C-suite of the company. Now, can things get better and worse over time? They can, but it's just like BlackBerry. Once you've lost your mojo, there is no real coming back for the most part. And there are probably more companies in technology that have gone out of business in hard drives than any other part of technology ever. Probably the fastest moving part of technology of all time, and also the best documented since InfoWorld started in 1970 or 68. They did a fantastic job of keeping that data. And you can see the pretty much the history of hard drive and hard drive companies and how many failed to adapt to moving technology. But unless Seagate and or Western Digital become nothing but memory companies, my guess is both of them have a bleak future going forward. It is a mad market, and we're going to take a look at a few. Let's go. This is one that just bothered me. I haven't had anybody answer. I've asked a few other people, but this stock was absolutely pummeled yesterday. I couldn't find anything in the news, but there's very few companies that are as heavily shorted in a single day as H&R Block was yesterday. I almost thought it was bad ticks, but I'm watching this one go forward. I've never seen one so heavily shorted. I've never seen a stock in a single day have more shares shorted than were initiated, even on stocks when they're headed straight down and they've gapped down 30 points. Most people don't short them, and one going sideways out here. Watch for news in this sector, but maybe somebody knows something that I don't know. But not a lot of volume yesterday, but half of it was somebody shorting these things. If it does not go down, my guess is it will go up. And I'm looking at some of these stocks that have the ability to have rip your face off rallies if I am wrong. Of course, the question is out here, why do I suspect that we are looking at lower prices coming in to Friday? Options continue to be rather stuck, and that shows, at least on the SPYs, of around 208. Normally what will happen is that this number will track up slowly each day. As option market makers get to Friday, they will continue to kind of move the cheese, as it were, and you get kind of a midpoint move out here. But that would mean that maybe we've got 25 or 30 points down. There's probably, well, I'm not going to say it. My data shows that there's less than a 10% chance that we close higher than the high today so far on Friday. So I'm not saying that we have a tremendous pullback, I'm just saying that at the ridiculous level of the VIX compared to the problems, I think you'd have to be insane. If you're bullish, I think you have to buy downside protection. If you're me and don't have any short-term positions on right now, I think you have to say, you know what? I'm going to at least go out there and say that why there's maybe just a 50-50 chance that we go down a little lower. The payout is so astronomically higher to the downside that I will say that there's a 50-50 chance we go 10 points higher, but 30 or 40 points lower at this point. Again, I don't think that there's any end-of-the-world indications I have yet to look at. Just the kind of picture out here that makes me think that there is so much potentially lower out here, and not heavily lower, but just some lower out here, that it is something. But yeah, if I had long positions and I was worried about them, I might not sell them, but man, insurance is incredibly cheap right now. And that has me at least putting a few chips on the lotto here for Friday. So just a word of warning. There's not a whole lot much higher to the upside. There is significant risk to the downside, just not more than a 50-50 coin flip. So for me, I'm willing to risk a little money if the market goes a little higher to make a great deal if some big surprise comes out over the next few days. Anyway, H&R, watch that in the next couple of days. If you're trading intraday, I don't see anything that would have me go long this thing, and why I'm not playing it in the newsletter. But my guess is that if something happens, this thing will be a 1 or 2 or 3 hour rocket to the upside with half the people shorting the living daylights out of it. Let's look at some other stocks out here. I wanted to see how some of these were taking areas of huge resistance. ABC, easy as 1, 2, 3. Do, re, mi, A, B, C. Anyway, Amerisource Bergen Corporation gap down with monstrous volume on the 5th of May. That volume came in at just shy of 12 million shares. We are filling that gap today with 1.6 million shares so far. That tells you just about everything you need to know. Now, there aren't so many stocks out here doing this that I'm saying that there's severe risk to the downside. Just a lot of stocks with very light volume, either breaking highs or not doing much. And I don't think anywhere near the volume I want to see in the markets going higher today. Anyway, we'll be back. Give me a call, 877-927-6648. Email me at path@tfnn.com. And, of course, put a message in the den.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY or periodic rate of interest is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And a question in the email from John. And what is that? I guess it's Orlando. Question is, what did I say? Basically, I said that there's a 10% chance that we go higher. So there's not no chance that we go higher. But if we go higher, probably not a lot left in the tank. We could just go sideways out here into Friday. A lot of short positions still need to cover some individual stocks. This looks to me like the S&P itself may be problematic. I would stay away from trying to short very highly shorted stocks already. I'm just saying on the S&P, I would not be surprised to see us pull back to 2120 by Friday out here. Of course, we've got more earnings, but it may just be a little anticlimactic, maybe just a little bit of a pullback, may just be some sideways action to consolidate this, but kind of tough for me to see a whole lot. We're pretty close to the highs of the day out here, but continues, like I said, to be incredibly cheap to buy insurance to the downside. That's almost always a good sign that there isn't a whole lot left, or let me put it this way, the upside is muted for a little while. ACO Brands, ACCO, the symbol. This one has a little breakout of the last 2 days on no volume. You had a big spike back on April 27th at $10.50, 1.7 million shares, going in with 400,000 yesterday and 323,000 today. Of course, I'm not going to be shorting a $10 stock. Aon, on the other hand, much different story out here. Wanted to see this thing move higher. Energy off this last low from June 27th is a lot lighter. I don't have enough to go on. I'm going to look at this stock tonight. But June 7th, $110.04, 2.9 million shares. And we're doing about 460,000 shares so far. Today, yesterday, 913,000 shares, which is still 1/3 the previous high. Energy off that low, of course, not all that exciting either. But one of the weaker looking stocks in the market. You always have to check, though, when you see these, whether or not they've got earnings coming. Let's take a quick look at that earnings date. That's why I'm saying there's a lot more work to do other than just looking at these here. Okay, July 29th. So, man, this thing's got a while before earnings. Anyway, like I said, I'll look more about it and research it tonight. Maybe one of the newsletter ones. I don't know yet. Bristol Myers Squibb. Let me take a look at this one. We have it. Come on, Mr. Squibb. There we go. This thing's kind of broken out. Not a lot of volume as we go over here. on the right-hand side of the chart. What was this volume back here? On the 6th of June, 9.5 million shares. We really never got anything as this thing broke in the last 3 days higher. And that's what I'm saying. Most of these stocks, I don't know, they don't look that horrible, but at the same time, a lot of them could fairly pull back just a little. Maybe these breakouts that haven't gone anywhere. Cabela's had been kind of beaten around for a while. This thing's got a nice big W pattern out here. May 2nd, 1.7 million shares at 53.79. Nice little spike out here today with this 750,000 shares so far. The energy off this June 27th low was a little bit more. I don't know if I see a whole lot in that one. Coach, this little one out here, this little piggy isn't wiggling all the way home. COH had the April 27th high at 42.13 with 10 million shares. Right now, 2.5 million shares as we go into that. Energy a little off from that May 13th low too, which kind of gapped down, never really had a lot of volume, bounced around and moving higher. But I'd say probably that 38.5 area could be a fairly easy pullback on that one if it fails up here over the next couple of days. ELY, Callaway Golf. It's summertime and the living is easy. Mrs. Porgy and Bess. But the volume is not easy. June 23rd, $10.62, 810,000 shares, only 500,000 shares so far today. Going to see how this one comes up. Not a real sign of strength as it blows through these highs. And by blows, I mean lays there like a dead fish on the dock. What else do we have going on out here? IWF, the Russell 1000 up at highs. Not a lot of juice on that one today. Could get it up to this 103.50, which is the June 20th, 2015 high. Had 5.8 million shares, or 1.5 million or 1.4 million shares so far is a little wimpy. Wimpy, wimpy, wimpy. What do we have else going on out here? Let's check the mail. I got a couple more emails. Anybody in the den? TWLO. What is that? TWLO. Twilio? Is that what this is? Yeah, it's a recent IPO. I don't know if you can make a whole lot out of it. Yeah, I mean, if we talking charts out here, it's kind of like asking one person who's going to be the president and saying that that's some kind of valid poll. I mean, a poll of one is not probably statistically significant. That's the real problem until these things trade for a while. The other thing is you have to go dig back into these things and find out when the lockup period is over. Generally, until lockup is over, these things are, it's on Harrison Street, just like our office, or just off Harrison Street, but it's in San Francisco, not Clearwater, Florida. What is the word on this one out here? I looked at this one last week. This one I would be very wary of, actually. This thing could be a nice trader to the upside, but now that I remember this one going out the door, we talked about these kind of deals before, and that these deals are called sliver deals. It's become pretty much unattractive to have these. This one made it out the door somehow. Maybe all the other associated noise running around. Sliver deals are when they basically go public with a ton of shares. Let's say that there's 100 million shares. I'd have to go look it up on this. But what they do is they go public. But with 100 million shares, they kick out about 5 million shares. And that's it. And everybody says, well, we're oversubscribed. There are not enough shares. And then what happens? The lockup period comes out. Suddenly, there's 50 million shares that are available in these stocks. But this one was occasionally they get rather obnoxious. And this one, from memory, was one of these I said, well, you got to watch this one very closely out here. This one looks like one that they will be dumping shares out for years to come. That is a lot of overhead, if I remember right. I'll check that on the break, but just be aware this is one of the extreme sliver deals out there where they have lots of shares to dump on. Be back in a minute.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
If you're ever looking at one of these recent IPOs, first thing to do normally is, even if it's not on the NASDAQ, go to the NASDAQ site and you will find the IPO information on it. They've been called sliver deals since the 90s, when everybody figured out that the SEC wasn't going to object when you put out such a few amount of shares. Probably the one that was the most obnoxious in the last 5 years was it was the casino stock. I'm trying to think of it. The older one that was the kind of the, I'm having a mental blank right now. Anyway, they put out, I think, 2 or 3% of all the shares, and then proceeded over the next 2 years to dump more shares out. And of course, went bankrupt fairly soon after that, was bought out by some other companies. But I can almost put the level of fraud on anything that is 10% of less than the outstanding shares printed. This is a 10%er, and makes me think that, man, you've got to be incredibly worried about them coming out and dumping shares. Some of the other stuff that you're going to find on the NASDAQ site is the lockup period, which is 180 days. So if you're going to trade this thing and you're going to trade it intraday, or you're going to trade it from day to day, just be aware that they're not going to dump those shares before the 180 days. The only company I remember ever doing that was, of course, one of the more obnoxious companies to ever do that, and that was GoPro, who were coming up with all kinds of ways, and the SEC rolled over like a dead dog, didn't do anything when everything was pretty obnoxiously apparent that it was a pump and dump. But you got 180 days. That means you've got till the 20th of December. Not a bad time to actually have lockup, because volume is almost always light. And a lot of people, especially going into Christmas, will wait until the first of the year to dump these. But if you want a stock to take a look at and possibly short, these setups are generally fairly good for the first of the year. That is, that anybody inside the company probably not going to sell the last few days and pay taxes on that year. What they'll do is they'll tend to hold these until the first day of the next year and then start selling. The insiders will start selling, and that's where the real pressure comes in and gives you a much better idea. They can sell that date, the 20th, but because of volume in the year, they tend not to, and everybody kind of forgets about it. You get about 10, 12 days, and everybody, of course, has gone off, had too many hot toddies at the New Year's party. You come back about January 3rd, and I've seen a lot of these companies that have lockup periods right before the first of the year kind of just go sideways, not a lot of volume, and then you see everybody dumping the 3rd of January, because guess what? They can hold on to that cash for the year without paying tax on it. And, you know, taxes are kind of a big deal, especially if you're one of the big underwriters in these companies. So there's a lot of stuff you can look at on the NASDAQ site. Interesting divergence of the show today, but keep an eye on it. I just don't like any of these that have very, very, like, I want to say Casio. What's the name of the Caesars. That's what it was. Caesars Entertainment. Talk about a absolute scam of an IPO, in my opinion. That was it. In the meantime, sell when you can, not when you have to. And we'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.